We're going to give you some tips this morning on navigating what appears to be a changing real estate market, and also to delve a little bit more into thinking about the pieces of a mortgage that you need to decide upon when you're getting a mortgage and how to make good decisions about that, along with talking about some of the things that people don't tell you about retirement. This is, of course, Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest-running radio programs, coming to you on a host of stations, along with a plethora, big word, of podcast channels throughout all of the podcast universe, along with our YouTube channel. My name is Joel Garris, certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of great folks, one of whom is sitting with me today. Chet, Cowart, good morning. How are you?
I'm doing great. How are you?
I am fantastic. Thanks for joining us on the program. And of course, it is Father's Day. The original air date of the program is Father's Day. So happy Father's Day to all of the dads out there. Chet, are you going to spend some time with your dad today?
I am. I'm going to be going over for dinner tonight.
Okay,
so,
well, is he cooking or are
I'll
you
be cooking. I
cooking?
I gave him a grill for his birthday a year or two ago, so
Okay.
I'll go over there and throw some steaks on there for him.
Perfect. So you're not making him do that on Father's Day.
No, and I think I enjoy grilling more than he does. It's one of my many hobbies. So
Very good. Very good. All right. Along with fishing, too. I can't believe that picture of that catfish you showed me.
yeah, well, they go hand in hand.
Yeah.
Catch them and grill them.
Very good. I am sure that I will hear from my three sons at some point here later on today. Such is the world. When the kids get older, they do have a tendency to kind of wander off. So your dad is very fortunate to have you handy, Chet. That is
Absolutely.
good stuff.
I didn't move far away, that's for sure.
That is good. That is very good. Well, for those of you who don't know, Father's Day is obviously a holiday celebrated in many countries around the world. It originated in the United States, going back to a celebration that was done in recognition of a Civil War dad who raised 5 kids, someone by the name of Sonora Smart Dodd, or at least that's what the fabulous internet told us.
Right. That's he must have been a great dad to have a federal holiday after him.
I know, right? That's pretty good. Not named a national holiday until 1972. Celebrate, obviously, on the third Sunday in June. Of course, yesterday was Flag Day, and that one's been around for a while as well.
Yeah, it looks like started in 1777. So that's certainly been, that's got to be one of the oldest, I would imagine.
Correct. And then also yesterday, the 250th, I guess, anniversary of the establishment of the Army. So all kinds of things to note this weekend, along with a host of headlines that we're going to get into in just a little bit. But also this past week, Chet, there was a TV camera crew at the office, and it looked like they were talking to you. So what was that all about?
Yeah, so that was Ivanhoe Broadcasting. They came in to interview me about some things to think about if you are going to retire early. So obviously there's a lot that goes into that. We talked about some big ones like, figuring out your health insurance and, keeping your withdrawal rate in check and how to invest properly. So it was a great conversation. I don't know exactly when it will be out for the public. They're going to send me an email when it's edited and everything. But yeah, it was great.
That's awesome. No, Ivanhoe Broadcasting, I think, distributes around the country. I remember one time talking to Nelson when he was at Auburn, and TV was on in the background. All of a sudden he says, "Dad, you're on TV, and that's an Atlanta station." And I'm like, well, yeah, we do those interviews from time to time, so never know where you're going to wind up.
Yeah, I hope they send me a follow-up email with where it ended up, who ended up playing it, because I'd be curious. I would, ideally, it would end up on a local channel, but maybe it'll go all around the country. We will see.
There you go. Very good stuff indeed. And I guess shifting gears a little bit to talk a little bit about the headlines, a little bit more somber note. obviously this Iran-Israel conflict certainly appears to have escalated over the course of the past few days. So obviously that's something that we're keeping an eye on, that's for sure, in terms of the impact.
Yeah, absolutely. Market opened a little bit down on Friday due to the news, so we will see how that develops. It's certainly a volatile part of the world, and a lot's been going on the last couple of years.
Big potential impact on oil prices. Anytime you see conflict in the Middle East break out, it does have a tendency to shift oil prices, which unfortunately is too bad, because that is this time of year, of course, is driving season, and we like it when those gas prices are below $3 a gallon, and this may unfortunately trickle up those prices for the 4th of July weekend. Unfortunately,
absolutely. I think a day out on the water may become a little bit more expensive.
That's true. That is true.
Marina gas is not cheap, anyways.
Yes, that is for sure. No matter what form of transportation you're taking, that's for sure. But economically, there was some data that did come out. Of course, also this past week, conversation with China in terms of the trade deal. It seems like that's, I guess, back on or back off or back on. It's, take a coin flip.
Right, a little bit of progress, at least it seems. I would say a step in the right direction.
Yep. So that is lots to keep folks updated with as the weeks go by. The biggest piece of economic data was obviously the inflation number. So that actually wound up coming out milder than expected.
Yeah, it came out at let's see, where is that? We're talking
2.4%.
2.4%.
Yeah, I think that was the number. Yeah.
Yep, there we go. 2.4%, near the record low recorded in April. So yeah, that's absolutely great news.
Yeah. So that was certainly some good stuff. Pretty tame in comparison. Because obviously that May inflation data would have some of the impact of some of this tariff, or a lot of the impact of some of this tariff conversation. But consumer prices only rose about 0.1% in May over the prior month. Year over year, inflation 2.4%. So quite near a record low that was recorded, I guess, back in April. So inflation numbers look pretty well, pretty decent. At least, or holding steady. Talking about what's on tap for the show, we've got some things, obviously, that no one tells you about in retirement coming up.
Absolutely, yeah. We're going to talk about some things that people don't talk about in retirement. A lot of issues, whether that be financial or psychological. There's a lot that goes into it that people tend to not consider ahead of time. So absolutely going to be talking about that.
Yeah, I think the key takeaway as we go through that discussion, there are things that these are the kinds of things that we talk to our clients every day at the office at Nelson Financial Planning, and that power of a conversation, I guess, is really cannot be understated, because to air out these kinds of topics, certainly these are not the kinds of things that you're going to get in a spreadsheet or using an online retirement calculator. There's actually a great book that I happened to get my hands on called Retirement Intelligence, Personal Retirement Readiness, written by a guy by the name of Robert Laura, that kind of really does provide some of those things that people don't talk about when it comes to retirement that are pretty important.
Absolutely. And then we've also got some things happening in the housing market. Interesting stuff if you are looking to buy or sell a home. There's a record gap in the amount of buyers versus sellers. There is 1.9 million sellers versus 1.5 million buyers, which is about a 34% gap. And it's a lot different than it was just a couple of years ago. So that's creating an interesting selling pressure in the market that may even drive home prices down. Yeah,
big shift in the dynamic versus where things were just about a year ago with sort of sellers, in April of last year. The folks that were, available to sell were, outnumbering buyers. So it definitely has shifted pretty dramatically, or should I say, buyers outnumbering sellers back in those days, which obviously created a lot of upward pressure in prices. So, so some interesting things across the board. All of that coming up next here on Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. Stay tuned with us here on Dollars and Cents with Joel Garris and Chet Cowart of Nelson Financial Planning. You know, I am a fan of reading business and investing books, as I would hope the listening audience would appreciate, right? I mean, chances are, if you're talking about financial stuff, you want to be informed about a wide range of things, and to get informed, I still think the best resource for that is good old-fashioned book. But at the end of the day, I certainly enjoy it, and enjoy what I do and learning about it every day. And let's face it, in the world of business and finance, there's always something to learn.
Right, and you encourage everybody else in the office to do the same.
Correct. Thanks to our summer reading list, not mandatory, just highly suggested, really looking to use it as an opportunity for the entire team to learn and to engage in personal growth. So every year we suggest some books along with other members of the team. So what'd you pick out for this summer?
So I'm reading Extreme Ownership, which was recommended by Zach here in the office. It's a book by Jocko Willink. Many of you may know him. He's sort of an internet personality, ex-Navy SEAL, and the book is really just about taking ownership of every aspect of your life and not being a victim, I suppose, and just taking life, by the reins and doing the best you can.
At the end of the day, you're responsible for your own life.
Right. Absolutely.
And that is certainly one of the central tenets. So good personal growth, good personal perspective type of book. I happened to just the other day get my hands on a book entitled Retirement Intelligence, Personal Retirement Readiness by best-selling author Robert Laura. I think he's based out of Michigan, if I recall correctly. Happened to be reading it, and thought it'd be interesting to share some perspective on that book to our listening audience, because it had some important things to say about retirement.
Yeah, absolutely. Retirement is tougher than a lot expect. In a lot of ways.
No, that's for sure. And there's certainly a lot of things that nobody tells you about retirement. And many of the issues we've talked about in prior programs, the issues involving loneliness and loss of self-worth. But there was certainly some other things that some key points that the book made that we wanted to kind of get into in this segment.
Absolutely. 2/3 of retirees have seen someone struggle with the transition to retirement. It's not as easy as everybody thinks about the financial aspect, and that's certainly very important, but there's more to it. Nearly half of all retirees report that adjusting to retirement was not only harder than expected, but took much longer than expected. And we definitely see that every day with clients that we work with.
Well, it's important to kind of have these conversations and talk it through. As we were saying in the last segment, this is the kind of thing where it's more than just a spreadsheet. It's more than just some online retirement calculator. These are the things that you really need to be thinking through and having a game plan for, because some parts of retirement, at least when you look at the numbers, I mean, there's a little bit of a dark side to it, particularly when you start to look at some of these reports from the Journal of Population Aging, where you've got folks that are retired are twice as likely to report feeling symptoms of depression than those who are still working. So some pretty dramatic numbers, and then you see that in the alcohol abuse as well.
Yeah, I think people struggle with finding a purpose in retirement. You have your whole life where your purpose is pretty clear. Your career goals are fairly laid out, and then once you retire, it's sometimes hard to find that purpose in life.
Something like 2/3 of all folks over the age of 65 report engaging in high risk drinking. So, there's a tough side to retirement, and so these are the things that you need to be aware of.
Absolutely, and the issue is people think retirement is some sort of promised land, rely on just the feeling, but sometimes the feelings will not cut it. You need a real plan of action of how you're going to spend your time in retirement.
Yeah, at the end of the day, you lose a lot. You lose your routine, you lose your direction, social connection, mental stimulus. I mean, all of that. And you need to be very careful about all of that when you do retire, because you're going to lose potentially a lot of that.
Yeah, no, absolutely. It takes some work in that side of retirement that not many people think about. You got to worry about your health and your relationships and just activities and connections in general. It's very important, and just very important to your happiness in general in retirement.
No doubt. I mean, the other issue we see is that people often use retirement as an excuse to procrastinate, right? Oh, I'm not going to do that now. I'm going to wait till I retire. I'll put that off until later. Right. The problem is that, we just don't know what later looks like. Right. And so that becomes hard. Yeah.
None of us have a known expiration date, so to speak. So absolutely, it takes some active, some active effort in order to make retirement what you want it to be. You got to think about these things for sure.
Yeah, no doubt. I mean, that's why I found the book Retirement Intelligence so interesting. I mean, the reality is it really did sort of summarize a lot of what we talked to folks in the office about, before they retire, but a lot of the conversations. I mean, I think there's two parts of the conversation, and I think that's why there's really no substitute for working with someone when it comes to retirement, is that there's the financial side where obviously you got to run the budget and run the numbers and all that, but then it's the non-financial side. One of the first questions that I ask, and certainly Chet, you've said it on a number of meetings over the years with us, one of the first questions that I ask people is, what are you going to do with all your spare time?
Right. And they may not expect that question out of the financial planner, but it should be that should be the first question, because it's an extremely important one.
Because you can have all the money in the world, but if you're emotionally and physically not able to take advantage of it or use it, then it's not much good to you.
Absolutely. No, I mean, there's more, much more than just the dollars and cents and the financial side of retirement, and those conversations, of course, we have every day, and that's what we specialize here at Nelson Financial Planning.
And that's certainly why that conversation, darn near every conversation when folks come in to talk about retirement, I always started off with that question, because that's a very thought-provoking question, and particularly as you read more and more about these surveys, these reports, these health reports that show high levels of depression, high levels of engaging in high-risk drinking behavior. If you're going to have a quality retirement, well, then it needs to have quality of life.
Right. Well, there's a big time difference in just free time in general between working and retirement. It may not feel like it, but we all have our weekends currently when we're working. But when you retire, you have to realize that every single day is what you make it, and that all of that free time can become overwhelming, and again, that lack of purpose can become a problem for a lot of people.
So important to plan for retirement, and I think a lot of people focus on that. I'm going to plan for retirement. I'm going to figure out my income, figure out the right withdrawal strategy, figure out how to be tax efficient, and no doubt, that's all important.
Very important.
But there's a whole nother part of it that I think far too often we don't hear people talk enough about, and certainly 800 number or website or whatever the case may be, not really getting into some of these more nuanced, sort of non-financial aspects about retirement.
Yeah, no, these face-to-face conversations that we have that go far beyond just the financials of it are very important.
Indeed. Well, with that, we're going to take a break, and if you're interested in having one of those conversations, visit our website, nelsonfinancialplanning.com, and there you can look to schedule a conversation at your convenience. So we look forward to talking with you. This is Joel Garris and Chet Cowart of Nelson Financial Planning, and we're going to take a break. Welcome back to Dollars and Cents. This is Joel Garris of Nelson Financial Planning. I'm a certified financial fiduciary and certified financial planner. Joining me is one of the fellow certified financial fiduciaries at Nelson Financial Planning, Chet Cowart. Welcome back into the program again.
Thank you for having me. I always love being here.
Very good stuff indeed. It makes for it to be a little bit easier now that you've done the radio show for many times. It makes it easier when television crews show up to interview you like they did this past week.
They did, yeah. They came into the office. This is Ivanhoe Broadcasting we're talking about, just to have me speak a little bit on things to think about when you're retiring early. I think it's a common desire nowadays, especially with people in my generation. They want to retire as early as possible, and that's certainly great. And I would recommend that if possible. But there's a lot to think about.
No doubt. You really have to kind of dig a little bit more into it. And I guess you were also doing some digging this past week and came across an article courtesy of the folks at Redfin that really catches your attention when we start to think about what's going on in the real estate market these days.
Absolutely, yeah. I mean, I think about the real estate market a lot as someone who is hopefully going to be a homeowner in the next couple of years, and this article was certainly interesting. So essentially what it was saying is that there's a large discrepancy between the amount of sellers versus buyers. So there's about 1.9 million sellers versus 1.5 million buyers, which is about a 34% gap, or 490,000 people, and that's certainly much different than we've seen even as recently as just 2 years ago, and especially during COVID. There's a lot more sellers than buyers right now.
Yeah, and that's just fundamental economics when you start to think about that, right? I mean, if there's less of a product, that's going to impact the pricing.
Right.
If there's more people looking to buy said product, then that's going to influence the pricing as well.
Absolutely, yeah. We're in a period now where with much more sellers and buyers, we may even see a decline in home prices. Redfin is predicting that home prices will decline 1% year over year by the end of 2025. So that is certainly something that I'm not used to seeing. So that's interesting.
Yeah, certainly, a dynamic that has shifted, particularly over the course of the past couple of years. And anytime you start talking about the real estate market, for most people, their home or the purchasing of the home is going to be one of their perhaps the largest financial expenditure that they will do in their lifetime. Right. And whether you're looking to relocate, or if you've inherited a property that you're trying to sell, or whatever the case may be, you've got to think through all of the dynamics that can be a part of the market. Interest rates now a little bit higher than sort of where they were. Right. Particularly when people, remember, I could have gotten an interest rate of 3%.
Right. Well, in combination with the increased supply of houses on the selling side, as well as buyers not super inclined to necessarily take out a mortgage at a high rate, that's certainly creating a dynamic that's interesting to see.
Interestingly, though, 6% mortgage rate, that's not that far off of historical averages. So some of it is a problem of perspective, right? Yeah. You always take the most recent information and cling to it, even though it's not necessarily the most accurate picture of what the overall picture looks like over a broader time frame. So we thought it would be good to kind of talk through the parts of a mortgage, because obviously that's a big part of that decision. And if you make a mistake there, it's going to cost you a lot of money over a long period of time.
Absolutely, yeah. There's a lot to think about when buying a house, and one of the most crucial one is interest rate, like we were just discussing. That's going to determine your total borrowing cost over time. It's very important to think about. Lower rate obviously means lower cost over time, but many aren't benefiting from the mortgage interest deduction due to the higher standard deduction. So that is a huge part. It's important to monitor the market before buying a house, and since rates reflect the current environment. So. absolutely.
No, that's a big part of it, and where the interest rates are determines a lot on whether you go with a fixed or potentially a variable rate mortgage. So a fixed rate mortgage, obviously the rate is fixed at whatever the rate is that is on that mortgage, and it's fixed for the entire term of that mortgage. A variable rate, there's a period at the beginning where the rate is fixed, and then after that, the interest rate's going to vary based on whatever the parameters are that were in that loan, generally following or tracking current interest rate. So a variable rate mortgage, also known as sort of an ARM or an adjustable rate mortgage, those are good when interest rates are a little bit higher. Matter of fact, the first home I bought in Orlando, probably 25 plus years ago, actually I did with an ARM. Got a lower rate for it that initial period, which helped with the monthly payment, and then ultimately refinanced it when rates improved.
Right. So if rates are high, you expect that they may go down in the next few years. ARM is the way to go, and those are typically 3 to 5 year period in which it's fixed. Is that right?
Right. Yeah. Right. Nope. That's typically how they work, and but it does force you.
Right.
The problem is it does force you into I'm going to have to kind of do a refinance at some point in the future.
Right. And you are at the mercy of where interest rates are after the 3 to 5 year period, which ideally is lower, but who knows?
Correct. Not a perfect scenario. That's where more often than not you would say, well, I want the guarantee, if you will, of a fixed rate mortgage, but might be able to take advantage of a little bit of a distinction on the interest rate if you look at those ARM rates. It's one of those things where you got to look at the analysis, like how much is the fixed rate, right, and then how much do I really save in the ARM rates. Sometimes those spreads are pretty narrow, so it doesn't make any sense. But back 25 years ago, I remember those spreads were about 1.5.
Yeah.
I mean, that's a significant significant spread. But if the spread's only a quarter or a half, then maybe you don't bother with it.
Absolutely.
Yeah.
And another thing to consider is the term of your loan, of course. This also, is going to affect your total cost over time. Typically, we see 30-year or 15-year mortgages. Oftentimes people go for a 30-year just due to the lower monthly cost, but you will spend quite a bit more over time, and that's important. It's always important to consider your total all-in cost of the property, and certainly a 15-year will lower that, but it's going to be significantly higher in terms of the monthly payment.
Yeah, on $100,000, I think the numbers are $865 on a 15-year for $100,000 of a mortgage versus like $650 on a 30. So it's about a 30% more payment. Obviously, if you can afford it, then the beauty of the 15-year mortgage is it's going to be gone in a much shorter period of time. But just got to kind of look at the numbers and think through your particular situation. Much like when we think about loan to value as well. That's pretty important.
Yes, absolutely. Yeah, loan to value. This comes into play a lot when you're considering paying into PMI insurance, private mortgage insurance. So you need to have at least 20% equity in the house in order to avoid PMI, and that can be a couple $100s a month. So it's certainly an expense worth avoiding if you can.
Yeah, and the PMI does you no good.
Right.
That just helps the bank. It's not insurance for you.
No.
It's insurance for the bank.
Right. So it's truly lost money. It's gone.
Correct.
Yep.
Indeed. And I guess speaking of that, the other thing that you want to show besides things like interest rate and term and loan to value is the other thing you obviously want to look at when you're thinking about mortgages and what to get for a mortgage is closing costs.
Right.
Is how much is this loan actually going to cost me?
Sure. Yeah. No, that can be a big expense, and especially if you don't plan to stay in the house for a decent period of time, those closing costs can really eat it up.
Right. Well, and that's another good example of where if you're not planning on staying in the house for a long time, maybe that ARM rate it becomes more valuable if you're only planning on being in the house for a short period of time. So a bunch of different factors to really think about, particularly, if the landscape in the real estate market is changing some, then you've really got to be thinking about that mortgage and exploring all of those different pieces to make the best possible decision.
Right. I mean, I think it was a much much easier decision to make when you could get a 2.5% mortgage. Now in today's environment, like you were saying, it's certainly not crazy, especially for history. But there's more to think about, and it's more of a delicate game to play just in today's current market.
No, indeed, and certainly some important things to be thinking about. And again, those are the kinds of things that we talk to people every day.
Absolutely.
At the office at Nelson Financial Planning. So we're going to take a break and return after these messages as we return to Dollars and Cents. So thinking about some of the headlines that we talked about earlier in the program, Chet, obviously Middle East is the tinderbox that it is, and certainly situation between Israel and Iran has kind of come front and center over the course of the past few days.
Right.
And certainly there's always those headlines that are kind of rattling around out there no matter where you look.
Right. Yeah. No, I think maybe there's some fear in the market right now, especially, but most recently as, Friday with what's going on with Israel and Iran. You can kind of see that in the numbers. For the prior week, U.S. investors bought a net $66 billion into money market and cash equivalents, and that I think certainly spells out a little bit of what the investor sentiment is at the moment.
Well, and that's interesting because that's the data that for the week ended the prior week, so it doesn't even reflect the latest headlines out of the Middle East. The world's obviously filled with uncertainty. Although the reality is, I'm not sure that there's ever a time when it's not. Right. Uncertain. Right?
Absolutely.
Nobody can accurately predict the future, so doesn't that, by necessity, make the future always uncertain?
Yep, we don't have our crystal ball, that's for sure. And yeah, I mean, recently it has certainly been a volatile time. It seems, week after week, the investor sentiment, it's great, and the market's pumping, and then the next week, investor sentiment, there seems to be some fear, and then we see these large inflows into money market and large outflows out of equities as well.
Yeah, that same week, something like $7.5 billion outflow from equity funds, and look, money market rates, and we've certainly talked about it on the program before. Money market rates over the past couple of years have been a nice reprieve.
Right.
Over where they were for the prior decade plus, when they were basically at zero.
Yep. Yeah. No. I mean, it's hard to argue against money market right now in a lot of ways, because if you have if you have fear of the equity market and money markets are paying about 4%, then of course that's a logical conclusion. But that won't always be that way.
Yeah, no, that won't always be that way. And the reality is that once the Fed starts cutting rates, then you're going to see an immediate decline in those money market rates. Money markets are not like a CD. A CD, that rate is fixed for that particular time period. They're better than your bank savings account. Sure. Because your bank is just setting that rate at whatever arbitrarily low number that they want. So the money market rates generally sort of track, the bond market in the overall interest rates. But as the Fed cuts rates, that's going to be a problem. And then don't forget, money market interest, as you saw on, you were sharing the story with me at the end of the week, where you had visited with an individual that was concerned about how much taxes that they had paid. Right. And what'd you discover?
A large position of cash and bonds that were paying a large percentage of dividends, and that did not help her tax return in any way. And as well, she didn't necessarily want to be in that allocation. So certainly some things to work on.
Well, and you're collecting interest from money market or bonds. That's taxed at the highest rate. Yep. And so when you start to say, well, I got to pay taxes on this, and then if inflation's still at, even with the tamer data that came out for the month of May at 2.4, your 4 is getting pretty skinny. Right. Even though it's, I think there's a massive amount of the population that is sort of comfortable. The reality is that you're not really getting ahead with that yield in the money market. So you got to be a little careful of some of this stuff. But certainly the data suggests that's where everybody's kind of running to. So be bottom line is be careful with that movement of that cash.
Absolutely. With inflation and then after the taxes that are paid, from these dividends, your real return may be even. It may not even be as good of a deal as it sounds, or as conservative as you may.
Yeah, even at close to that 4%, by the time you pull inflation and taxes out of it, you're not
looking too good.
You're not getting that far ahead. So when you got 66 billion, I guess that was the number pouring in a week. Might want to think that one through a little bit more in terms of your overall investment allocation. But yeah, certainly talked a lot today on the show about retirement and mortgages, two very important subjects that have major financial impact. That's for sure.
Yeah, far too often I think people retire without considering some of the financial issues that you may come across in retirement. There's a lot more to it than just numbers on a spreadsheet. There's the emotional side, the relationships, finding your purpose, and just filling your time in general. That is a large factor in your overall happiness in retirement, and should be talked about.
Yeah, I mean, things that you don't just find out using a spreadsheet or a retirement calculator or whatever the case may be. That's why one of the first questions I'll ask is, what are you going to do with all that spare time?
Right. No, that's a question I hear you ask in just about every meeting.
Absolutely, because it's a big part of some of those things that we were just talking about early in the program that people don't know about retirement. Beyond kind of the loneliness, loss of self-worth. There's a lot other issues that you might confront in retirement.
Right, and you see this come to a head when you look at the alcohol stats. They're not good. 2/3 of over 65-year-old individuals are engaging in high-risk drinking or struggling with drinking in general.
Twice as high a rate of depression versus among those who are retired versus working. So important to kind of get a plan of action in terms of what you're going to do with your life when it comes to retirement and how you're going to spend your time. Develop that routine and make sure that you're spending some time developing connections, getting out there in the world as a whole,
and develop that routine before you retire, because oftentimes people use retirement as they say, I'll do it when I retire. I'll take this trip when I retire. I'll do X, Y, and Z when I retire. And then by the time they have retired, they have no good habits in terms of how to spend their time. And I think this is where we see a lot of these problems.
Too much idle time, as is always the case, never a good thing. And for that, stressing the importance of a conversation beyond the spreadsheet analysis. Those are the things that we do at the office every day at Nelson Financial Planning, is we engage in those conversations. And certainly, I'd like to think we can run the numbers and the financial part pretty darn good. With the team of folks that we've got, but oftentimes it's much more than that. As is the case when we think about mortgages as well. A lot of data, a lot of things to be thinking about when it comes to a mortgage. Particularly, oftentimes you're using that for what will be your largest financial item that you'll make a decision on.
Absolutely, that was a big topic. As discussed slightly earlier, quick numbers: 1.9 million sellers in the current housing market versus 1.5 million buyers, creating a little bit of a discrepancy in terms of supply and demand there, which may drive down prices. So that's interesting to see, and it does create a lot of or a need to talk about the right way to buy a house.
Yeah, and certainly when you think about mortgages and you're comparing the difference between mortgages, we were talking about kind of the four main things. Obviously, it starts with interest rates. Right. What's the interest rate environment?
Yep, exactly. That's going to play a large part in just the total borrowing cost and your total all-in investment into the home. That's a very important thing to consider.
Yeah, and then that determines whether you're going to get a fixed versus a variable loan. The fixed loan interest rates, well, obviously that's fixed for the entire amount. Right. The variable is usually only fixed for a certain period of time.
Yep, and in a higher interest rate environment, the ARM is becoming a much more viable situation. And I know that you bought your first house using that.
Yeah, I mean, it depends on the spread, right? So you got to really look at that spread between the rates. I think in today's world, the spread might be a little thin. I know back 25 years ago, it was almost like 1.5%. That's a big enough spread to make make that work. And then to think about term of the loan itself. That's a big part of what drives the payment as well.
Right, absolutely. 15-year versus 30-year. Obviously a difference in the monthly cost, but a large savings over the length of the term in terms of what you spend over time.
Yep. So important to always get perspective on any of these topics, whether it's retirement or mortgages or what you're doing with your money, beyond just sticking it into a money market like many people are. Those are the things that we're here to talk about at Nelson Financial Planning.
Absolutely. We have these conversations every day. And if you have any questions or have any concerns over a possible home purchase or just anything in the financial planning world, absolutely call us for a free, no obligation consultation.
Check out the website, Nelson Financial Planning. With that, we're going to sign off on this week's episode of Dollars and Cents with Joel Garris and Chet Cowart of Nelson Financial Planning.